Right, officially live.
Welcome everybody to yet another Startup TNT event. We have, instead of Zach, it's Tim. What's going on, everybody? Welcome to another fun one. I'm here. I have one of our awesome sponsors, and I can't see myself that clearly in this thing, but somewhere on this side here is AEC, and we have Cristiana Monzacco here helping us out, one of our great friends, one of our sponsors, Christiana. Do you want to introduce yourself? Say hello to the wonderful people that we have here today.
Yes, I'd be happy to. Thank you so much, Tim, for having me. So happy to be with you here today. So at Alberta Enterprise, our mandate is to create access to venture capital for Alberta's tech companies. And we do this by investing in VCs that invest in companies. We currently have 16 VC funds and 3 angel co-investment funds. And those funds and their partners have invested more than $600 million back into Alberta tech companies. Building a tech ecosystem from our perspective starts with the founders, but we know a big part of startup growth has to do with the great mentorship from the earliest investors, angels, and early stage VCs. So it's amazing to see Startup TNT cultivating a whole new generation of equity investors. And I really look forward to what Evelyn will tell us about the angel investment landscape here in Alberta. Founders, I hope you leverage the expertise, the access to networks, and other markets that these investors bring. So thank you so much, and I'll turn it back over to Tim.
Thanks, Christiana. This is awesome. I couldn't have said it better myself. It takes a village to create these awesome companies that we hear about in the news. And who better to tell us about how to help out these companies and how to be an angel than Evelyn from Valhalla, one of the experts that we have in the room here today. Evelyn, if you want to give us your presentation, that'd be awesome. We'd love to hear about it.
Okay, so I'm just gonna share my screen here and let me know when you can see it, and hopefully this works because technology, that's not what I want. Hold on. Is it working now?
Good to go.
No notes? Perfect. Awesome. Well, thanks everybody for joining us today, and I hope you have been having fun at the TNT Summit. I know I have. They had some very interesting sessions, so hopefully mine lives up to the par, obviously. So we're gonna talk today about angel investment. Usually I like to get a feeling of who's in the room, entrepreneurs versus investors, since I'm gonna be talking about things that will speak to both ends. But I can't really see everybody, so maybe I'll have Tim let me know at the end of the session, what's the breakdown of entrepreneurs and investors. But let's get started. So yeah, today we're gonna talk about, first of all, what is angel investing and where did it come from? What it is to invest in startups, what the funding ecosystem looks like. And then we're gonna talk more on the investor side and how you build your investment thesis and how you start getting into becoming an angel investor. So I guess first things first, shameless plug for Valhalla. So Valhalla Angels, well, Valhalla Private Capital, we actually are a full service capital firm. We have services from cradle to exit for founders and also for investors. So we have the investor and startup programs, which you might have heard of. We call them base camps. We also have the angel investors group right now with 6 chapters. Then we have a series of different funds that Valhalla manages. We have our global accelerator with funds in Latin America, Southeast Asia, currently doing a project in Pakistan and Egypt. And also we have our M&A services for companies who are ready or getting ready to get into the exit stage. Some of our activities, so Valhalla is actually one of the most active angel groups in Western Canada. We are consistently in the top networks across the country. Also, we are home to Angels of the Year for 2018 and 2019. We have currently 6 chapters, Calgary, Edmonton, Vancouver, Kelowna, and recently added is Regina and Saskatoon. We have about 150 plus members. We've had, we have about 270 deals in our portfolio and a total of 72 million invested since 2012. One of the great things that we do with Valhalla is that we leverage our online member platform to share deals and also for our members to connect with each other. And a little bit about me. Just look at me. So my name is Evelyn Cerda, as you introduced me, Tim. And so I'm the chapter president for the Regina and Saskatoon chapters. Previously, I was the executive director for the Saskatchewan Capital Network, which was the local investors network in Saskatchewan. And previous to that, I was the entrepreneur manager at Economic Development Regina for about 6 years. So very involved in the startup ecosystem for a long time. Love working with entrepreneurs and investors. Some of the key things that I focus on is on deal screening, connecting founders to investors, obviously, and pitch coaching. Now, let's talk about investment. So as we all know, everybody has different options for investment, right? So we have the classic real estate, which tends to be more stable, however, not so much in some years. We have bonds, options, we have the public markets available to everybody. We have venture funds, and then of course, angel investing. And this is the one we want to focus on today. Higher returns, however, very high risk. And let's get into that. Somebody said once that angel investing is the most exciting thing that you could do with your money. It's a bit crazy, but it's also very important for our startup ecosystems. So what is angel investing? So the first time that angel investors was used was in Broadway, where wealthy people or philanthropists used to provide money to theater productions so they could deliver to the public and stay afloat. Eventually, that got coined by William Wetzel from the University of New Hampshire. And since then, honestly, it's been just growing. It's been used a lot. The number of angel groups in the US and Canada and across the world has been raising. According to BDC, there's about 20,000 and 50,000 angels in Canada and about 35 angel groups across the country. Their check sizes usually range from 5,000 till up to, like 30K, in the hundreds of thousands, and then 1 million to 2 million globally. Frequently, these angel investors are supporters of startups, and the reasons why they do it is more than returns, but also they still want their returns. So who can be an angel? When we think about angel investors, a lot of people think about this, right? Someone that is a millionaire, that could be famous, that has built empires, and then now they're investing in smaller companies. However, some people might also think about this. And I love Kevin, but the image that he portrays as, basically a shark. He wants to take half of your company, only cares about profit, and he's a bit of a control freak, and we'll get there one way or the other, right? Let's not focus on this type of angel, but they're still out there and they're still very smart and useful. But I would say that in reality, oh, look at that, it's Zach. He snuck away. In reality, most angels are within your community. And right here in Alberta, you have a lot of people that invest in startups. And let's take Randy Thompson, for example. He was Angel of the Year in 2018 and our CEO of Valhalla. We also have Derek Hunter, who was also Angel of the Year in 2019. These awards are actually at a national level, and they're right here in your community. Not to mention Patrick Lohr, Mark Blackwell, Christina Milkey, Alice Reimer, Alison Sandstrom, and honestly, like so many other angel investors that you have right here and access to. So who can be an angel investor? So basically accredited investors, high net worth individuals with experience in business or technical aspects. And usually they have a vested interest in supporting entrepreneurs and growing the entrepreneurial community. So an accredited investor, and this is a question that we get a lot, is there a way, like it's a certificate, like how does it work? Basically is based on your income, net assets, or your financial assets in general. Based on income, you basically have to have about 200,000 or 300,000 combined with your spouse as net income for the year in the most recent 2 calendar years, and have a pretty good reason that you will achieve the same level of income in the current year. Also, either alone or with your spouse, you own net financial assets over 1 million, or as an individual or with your spouse, you have net assets of at least 5 million. Also, we have the category of an eligible investor that has certain like limits. I'm not gonna get too much into that because it varies by province, but that's also an option. And usually it has a lower threshold that you can meet as an eligible investor versus the accredited investor. Also, to be an angel investor, you have to be investing in the private market. And the private market is basically, we all know that we have the public companies that they're available to everybody for investing. However, the private companies are not available to everybody except friends and family or accredited investors, right? Sometimes friends and family would qualify under that eligible investor. And this is basically regulated by the security commissions just because mostly they're trying to protect you, not to use money that you don't have, right? Most common exemptions, as I mentioned, friends and family and accredited investors are through personal relations, or, you know, like as an external investor within your community, or in general, just you connected with, but they have to qualify it as accredited investor. And again, please don't invest and try to get into this if you can't afford it. So for investing in startups, let's talk a little bit about what that entails, right? If you're investing in a startup, you're looking for a repeatable, scalable business model that can actually grow and expand across the board. This is why a lot of the angel investments occur in like technology or not so much brick and mortar, although it does happen, but they have to have a way to scale their business, right? We have entrepreneurship versus startups is not the same. Startups usually have a pretty steep revenue hockey stick that we're looking for, right? Versus entrepreneurship, everybody can be an entrepreneur within, right? Even inside of other corporations, you can have entrepreneurial spirit and like take on new tasks and everything, but entrepreneurship versus startup is always different. We're looking for that high growth potential. Lifestyle companies, not so much a good fit for angel investment, just because angels are looking for a return, as we mentioned, and lifestyle companies tend to, you know, there are a lot of great companies in this space that tend to be, you know, like stable for a long time. But what we're looking here is an opportunity to get our money back times 10x at least. Also, very important, investing in startups definitely has a very high failure rate. If you are getting into the space, you have to make sure that you are able to deal with that. it's not for everybody, right? Like it is the most exciting thing you can do with your money, but it's also very risky. And, sometimes people want to just keep their money safe and growing at a 1%. And that's good for some people. But when you're an angel investor, you have to consider the high failure that you're going to see in your companies. Outsized returns usually would pay off for the rest of the investments that you've made. Again, not everybody has that, but this is what we're looking for. And also a big market, again, with scalable businesses that are trying to address and grow, different markets and grow from there. Very important. I mean, it doesn't have to be one market, but it could be application on different markets and how you're going to actually grow your revenues and you're going to expand the business. So basically we have, like 305 million total startups annually. And we have about 100 million startups opening each year. So we do have a very high failure rate, but there's always a new startup coming up with new innovative ideas. Now, every company is a technology company. Some just don't act like it and will be left behind. Very true now, especially with the times that we're living, right? If you're a company that is not in the tech space, at some point you're gonna have to touch into your technology to be able to expand your market. So don't just see your company as a brick and mortar or as just a consumer products, but we're all touching on the technology side now. Okay, so if it is so risky, why would we invest in startups, right? So I guess, first of all, because we've all heard about companies like this, and we get all excited because 10 guys got super rich out of, putting in 50K or 100K. And it is true, right? Like it is an exciting world, the startups world. So here you can see, I don't know if everybody can see it very clearly, but these are some of the biggest valuations recently. And it does make for a big and exciting space to be playing in. So there's a lot of people that are becoming angel investors. It's becoming more popular. And so we're going to talk a little bit about how you can start getting into that. Also, not just like this type of companies, but also companies like Smart Suites, right? Recently growing and they got acquired. So it's not just for like the Slacks of the Ubers of the world, but also like companies like Smart Suites. Now, so this is one of the things that differentiates startups from the traditional business. Traditional business will probably have an income or revenue line like this, where you're like growing steadily. Maybe you get some debt to continue growing. You're basically bootstrapping. And it's all good, right? Like it looks great as a company that's probably gonna be around for a while. However, with startups, what we are looking for is this shape in the revenue, right? So you're probably investing a lot at the beginning and then hit about a point where you can start seeing some product market fit. You need money to like explore your business and start multiplying your revenue by like 5 times, 3 times. And this is when like external investment can be very helpful to help you get to that scale up point where you're ready to go out and conquer the world, and you need the money because you already have the team, you have the product, and you have your market identified. And so this external source of income, in exchange, of course, of equity or debt, can help you hit that hockey stick curve. And this is what investors should be looking at when they look at someone's financials. Okay, so angel investors don't invest by themselves. We need a strong funding ecosystem that actually covers the need of capital for our entrepreneurs from the startup or idea until the exit. So Let's talk about where angels play. Usually on the seed, sorry, I'm pointing at my screen and I'm like, you guys can see me. So usually it would be on the seed side, right? This is after you already bootstrapped, you went to friends and family, you got some government grants, some business competition gave you a 10K, your co-funders put in some money. After you do all that, angel investors usually come in to, again, help you reach that commercialization and hockey stick phase. Usually what we would do is that you should be raising about 100K to 1.5 or 2 million sometimes. And then you already have a proven concept and you're ready to commercialize. Now, for those that are trying to get into the angel investment space, very important that you need to understand what are the choices and the trade-offs that you are making by investing in the startup space. In Valhalla, we have also a say that is, you learn by doing. And also there's no two investments that are going to be the exact same situation. So that's why the more investments that you make, the more you're going to learn and you're going to start getting those cues from who's a good investment fit for you and who's not. So your investment thesis, not everybody gives this specific thought, but you probably already answer it, especially if you've made a couple of investments. Now, when you invest in a company, right, like every dollar that you invest has a vote for the type of world that you want to live in. And so what is that business that you want to support? What is the world that you want to live in, right? Like, why are you doing this? Those are very important questions to ask yourself to then start digging into what your investment thesis would be. Also, what type of angel investor you would be. We have the classic control freak. He, like wants to be in there, build the business, tell you what to do, maybe would ask for a board, sit at the board. They're very smart, but they do tend to have that personality. Also the semi-control freak, which, they want to be very involved, but then they also don't have all the time in the world. So they want to go home and see their families after. They're not going to be available for you to call them at 2 a.m. or so. And then, but like great partners as well. You have the super angels who they want to go big in certain deals, about 100K, lead the rounds. Usually they get usually the hottest deals in the market just because of check sizes that they use. The sprinkle and sprout type of investor, which, you put a little bit here, put a little bit there, try to diversify, and then the yield and quarterly dividends focused type of investor, more so on like that revenue piece. Also, what is your approach that you're going to take to investing? You can go through your portfolio. So invest in diversify, different company sizes, different stages, different sectors, all of that. You can be focused on location, right? A lot of investors focus on their own communities and then they expand from there. The stage of the company, seed, pre-seed, Series A, and then the sector or industry. And some investors would not feel comfortable with investing in sectors that they're not familiar with, but some other investors, they're okay with that. Okay, think about risk, right? Like these are just some of the main risks that you're gonna be or should be considering as an investor. And as an entrepreneur, like think about the investor and like they're facing all these different risks as well, right? So you're investing in the person or the team, what's the competition, the financial risk of, investing in startups, what's the macro level situation with the economy, the growth and scalability of the company, what's the risks that you face depending on the deal structure that you picked, and then also the risk of this company, like either failing or never exiting, and if you're going to get your money back or not. 6 key points to consider when you are looking into a company, to analyze the deal that you're getting into. So the idea, the customer, can they protect their idea or their IP, technology? Is the team the right fit? Is the team the right people to grow the company? What's the deal like? And then can they actually give you your money back? Very important. Can you actually think as an investor and not just be charity, right? Like a lot of people do it because they want to help the entrepreneurs. But if you're an investor, you definitely should be thinking about getting some of those returns so you can reinvest your money into other companies, right? So can they get your money back in 5 years at a 20+% IRR? That's something to consider, right? Like to not get into that like whole charity piece. So I'm not gonna get into this, but this is a specific approach on portfolio where like basically a 10% of your exits is gonna pay for all the investments that you've made, right? And then just like, how can you get started as an angel investor? So these are just some options. You can go solo, which is very flexible. It could be very fast. However, it could be also very slow, as you're going to have to like get out there and shake hands, and you might get poor deal flow or very small deal flow, not as much variety. Also, probably you can get or can miss the hot deals because you're not as well connected with the other investors. You can go through groups, right? Like Valhalla. We have a very standardized process. We do deal screening for you already. So when they come to pitch to you, they already went through like 2-3 screens already. And then sometimes we have the benefit of sharing the diligence with other investors that might be interested. The one thing is that you don't control the deal flow that you see through it, right? There's funds, which again, like you invest in there, you don't get a choice on what's being invested in, and there's overhead costs that you have to cover, but there is a lot of diversification and low time and effort committed. And then the other one would be the special purpose vehicles that you can actually put together. It could be a lot of work. There's some overhead costs, but like if you have the passion and you think you want to lead that, that's also another way that you can start getting into it. And I think I'm gonna leave about 5 minutes for Q&A if somebody has questions. But I just wanted to leave you guys for some next steps. Please, if you have any questions, are looking into raise money from angels, or you are thinking about becoming an angel investor, please contact us. There's my email right there. Also, you can follow Valhalla Angels or Valhalla Private Capital on LinkedIn and on Twitter. And also, if you want to test it out, sometimes we actually do invite people as guests just for them to see how our pitch forums run, and both investors and entrepreneurs. And yeah, and then we can go from there. So Tim, I think that's it for me. I don't know if there's any questions.
Sounds good. We're right about at the 2 o'clock mark. So great work, super educational. I've definitely seen these slides before with the Angel 101. So for context, I mean, for everybody in the room, and there's some of the investors that are in the room, you guys have seen this too, obviously. The more elaborate version of this, because obviously this is the abridged 30-minute version, is super informative. Valhalla's helped us take folks that are brand new to angel investing, teach them all about it, and then have them write checks into startups through TNT and obviously through themselves as well. It's a bunch of fun. Angel investing is awesome. It's like sophisticated lottery ticket purchases. It's great. With all that to say, it's 1:59. Thank you, Evelyn. Thank you also to Valhalla for being our education sponsor for the summit. It's awesome working with you guys, and here's to many more ways that we can work together in the future. Hopefully we have an announcement coming soon. But with all that to say, the next the next session is hardware doesn't have to be hard. It can be fun. Zach's hanging out with G2V Optics. If I understand correctly, they're going to do a tour, but I actually don't really know what's going on. So go and check it out there. There's a link in the chat here. I'll post it again. And we'll see you guys at the next session. And of course, if the pitch is at 3. See you guys soon. Thanks for coming out.
Thanks, Tim. Bye, everybody. Tim,